People, how we doing? How's it going? At the moment, we're gonna do a little walking series, little talk, the streets of Miami. So I wanna talk about financial freedom, being financially free. We're gonna look at the city. I'm gonna take a look at the city, see what's going on in the city. Look at this, it's a beautiful city. It's a really beautiful city full of beautiful people, very good looking people. What I wanted to do a little series on financial freedom, what that means, what that looks like, how to achieve it in your minds, how to manifest it, and what it looks like for you, what it looks like, because it could look different for anyone. It could look different for anyone. And so I want to look at and evaluate what that looks like for you, for me, how it could look different for anyone, right? While we do a walking series, so let's talk about it. All right, so what is financial freedom? What does that mean? It's very ambiguous. It's a very ambiguous topic, very ambiguous concept. But in my opinion, financial freedom is the ability to have financial security and not need to work, so that you have a passive structure or income-based structure that's coming in monthly, that's covering your expenses, right? And the first step to that equation is understanding your level of expenses, having them be predictable so that you can forecast how much income you need to achieve said financial freedom, okay? Everybody's income level, everybody's expenses are going to be different, right? And it's definitely, you have to know what these expenses look like. You have to evaluate them. You have to ensure that you understand and do the math and do the budget, whether it's via Google Sheet, whether it's via Monarch, the app. Back in the day, it was Mint. Whatever the case may be, you need to have a plan in place to achieve that objective of like understanding your expenses. Because without understanding your expenses, you cannot build your financial freedom plan, okay? So for example, if you have, if your rent is $2,500, your food is $1,000, your phone bill, your entertainment, etc., everything nets out to $4.5 thousand, right? So now you have your number. It's not that hard. I can send you guys Excel sheets on this. It's really not that hard to figure out. It's very simple stuff, but it takes like 10 minutes, 15 minutes to consider and to do the math, okay? Once you do the math, once you get the math down, now you can move into the next step. But that math, the understanding of your baseline expenses is a lot of times people neglect it. People kind of just, they use their Visa and they have the credit cards and they do their thing, and they're not disciplined with understanding your expenses. And even if you understand your expenses, it varies so much, right? Like you have a gift that you have to pay for, you have a trip that's coming up, you have a car payment, a big car lump sum payment that you want to do. There's a lot of things that come up in life that affect what happens, right? So you got to predict those. You got to assign different lump sum budgets for those, But once you have you have the discipline to figure this plan out, to map out your budget, now you can move to the next step. This is beautiful Midtown Miami here. A lot of different shops, streets. We might go over to the design district as well as I take you on my little financial journey walk. Nice little area here. Not too busy, but nice. All the shops here, nice restaurants, etc., etc. Very nice place. All right, so once we know our expenses, once we have our expenses down, what can we do? Once we know our expenses, well, now we know how much income we need to hit. And if it's 4,000, if it's 5,000, now we can figure out how to generate that kind of income to make that happen, right? How are we gonna do that? All right. Yeah, I mean, it doesn't come easily. It doesn't come naturally. It comes with hard work, putting in the work, putting in the effort to get there, right? That's, it's gonna take work, right? It's gonna take work to achieve financial freedom. This thing doesn't come easy. I don't care what these people say on YouTube. This stuff doesn't come easy. But if you stay disciplined and every single month during your W-2 phase, you're saying, all right, my expenses are 4,000, but I'm netting 6,000, 7,000 a month. I'm gonna continue to save and grow my investment account towards that goal target, right? I'm gonna keep growing it to that investment amount to hit the goal target. This is good. I get to get my steps in while talking about finances. My two favorite things to do. All right, so you've saved up. You saved up 350K. You've saved up 450K. That's a good number, right? And you've saved it and grown it through something like VOO, which is Vanguard's S&P 500 fund, right? Maybe you've done some QQQ, NASDAQ. Maybe you have some individual stocks. Maybe you have Bitcoin. Maybe you have Meta. Maybe you have Amazon. Maybe you have whatever, Palantir. Whatever investments you've been getting yourself into. Awesome, up to this point, right? It's been, and you can continue down that trajectory, really just using growth stocks to make that happen. The problem with growth stocks, there's no income. There really is no income. Like with VOO, it's a 1% dividend, 1.2%. So you're gonna need multiple millions of dollars to use that dividend to live. Okay? So if you're seeking income, right? Where like in the case of, let's say you kind of maybe wanted to take a break from work and wanted to use your investment portfolio towards making something happen to live. Well, what do you need to do? You need to reallocate the portfolio, a piece of it, into an income-bearing ETF, right? Income-bearing ETFs. The ones that are very attractive right now are covered call ETFs, okay? Covered call ETFs. There's some really attractive ones right now. The ones that I'm biggest on, BTCI and QQQI. Okay, the Bitcoin covered call by NEOS and the NASDAQ 100, QQQ, the QQQ ETF by NEOS. Okay, one of them does a 14%, QQQI does a 14% yield, BTCI 28% yield. These are very high yielding assets and the NAVs do not depreciate unless the market goes down right now. They are new. They are risky, as I keep saying, but they can really be something special. We got planes, we got trains, we got automobiles, we got so much going on here. We're in the middle of the design district. A lot of money is passed around here, exchanged here. A lot of money is spent here. It's not a good place for savers like us. But we don't venture here too often. We're not going to Chanel. We're not going to Dior. We're not going to Michael Kors. We're not going to, I don't even know all these names. Ralph Lauren. I don't think Ralph Lauren is all that nice. But it is a nice place to look at and to see. It's not bad. Reminds you of, ambition and how to progress and, to aspire for more to a degree. But, we don't need to be crazy rich. We need to, be comfortable. Do a little walk visual. coming up on Aloe. I don't know what that is. Here we have the Tesla store. The Tesla robot. A little Cuban music on a Friday. I like it. Boom, boom, boom. Okay. All right, guys. All right, so we have the plan, sort of. We have ourselves, we understand our income levels. We understand how to stay disciplined with our monthly budget. And things fluctuate, but you know, generally speaking, we're gonna stay disciplined with that. And then, you know, the next piece, as I mentioned, is saving that lump sum. And not just saving it, investing it throughout the way in those growth assets, QQQ, VOO, blue chip growth stocks, right? Once you get your lump, once you get your growth all there, right? And you get about, let's say 450K. Now we can start pivoting to an income bearing asset. Okay. We talked about it. QQQI, BTCI. I'm loving those for financial freedom, right? And you can drip them. You can dividend reinvest them if you don't want to live on that income, right? And you can continue to have that drip, and that will just compound and flywheel the effects of your portfolio considerably, right? It's true compound because now it's that cash is being reinvested, and you can grow on that, right? The other compounding effect is through appreciation, but this is through compounding through dividend dripping and compound reinvesting. So that's really, really cool stuff. You know, for me, I like a mixture. I like a mixture of both income and growth, right? So I think a percentage of your portfolio should be, you know, looking at or allocated to income. And that can be as much or as little as you want it to be. Or if you want it to be that mark that hits your expenses, get it there. And then beyond that, right now you can have the rest of your funds allocated to growth. If you can get enough income through passive means to cover your expenses, now the rest, it's all gravy, baby. It's all gravy. The rest can be focused on growth. So I think it's the combination of both things I just said, right? You can do, once you get to a point where, let's say you have $1 million assets, let's just say 350K to 450K, BTCI, QQQI, right? And that's just pumping out cash for you every month. The other 600K then, VOO, QQQ, maybe some international exposure and BTC, allocated how you please. Let that shit ride. Let the growth ride. And you'll see the effects of it, right? Now you're covered on a daily basis where you don't really need to work, kind of. You know, it just depends on your expenses. If you're spending, you know, $5,000 a month in a high cost of living area, $5,000 a month, even for a couple, or if you're single, or if you're in a relationship, $5,000 a month is healthy. You should be able to live on $5,000 a month. If you're doing more than that, you know, you have a luxury lifestyle, and we gotta recalibrate. But you know, if you're living below or at your means, you have 450K, and that's a lot of money. But 450K, that's gonna generate you 60K. Now, is it all guaranteed? Absolutely not. These are investments, these are high risk. You have to be comfortable with the risk. But like I always say, you know, with this risk, and with the down period, let's say there's a bear market, guess what? You're still getting paid the income with these vehicles. You're still getting paid income. Whereas, like, you know, if you had it all in growth stocks or ETFs, there's no income there, right? You're not going to be able to weather that storm potentially. Should you need to sell? Now you need to sell some assets. Now you're selling in a down period. Whereas this, you're just generating that income. And maybe, the yield will be a little less because the price that would depreciate a bit. That's fair. But you're still generating that income, hedging yourself. So it's just a beautiful two-pronged strategy, really, of both BTCI, QQQI, that healthy income, and then, the rest is sitting on growth. I can't see any better strategy for higher risk tolerant people, higher risk tolerance, people that are open to these ideas, right? Now there's even higher risk. There's even higher risk. Let me change this. Let me see. Is this better? There's even higher risk, right? There's even higher risk things. Look, this looks better. The video. This looks better. Let me see if I can extend it even further. There's even higher risks. Like if you go yield max, right? You can go yield max. You can go yield max with like ULTY and with Misty. But those, man, I look at those NAVs. I look at the NAVs on those and I go, nah, that's not for me. I look at those NAVs and I say, they keep depreciating 30%. I don't care that you still get a total return in a gain. I don't really care that the total return is still a gain. The depreciation on that, it's not for me because you'll continue to lose gains. Your income will continue to decrease year over year because the price depreciates so much. So you're left, sure, you have 100% dividend now on a $6 price of ETF, of stock. Nah, not for me. I looked at it, considered it, and it's enticing, it's intriguing. ULTY is the new hot one, but you can notice with these assets, everyone just moves to the quick trend, right? Everyone was on Misty because they had such a strong payout. What happened? Misty's payout went down, and the price went down, and everyone's freaking out. And you hear the Reddits. Everyone now is pivoting now to ULTY, new strategy, weekly payouts. They've adjusted their strategy a bit. And I think it's, I would be open to testing a bit of it, just testing a bit of ULTY, just to kind of see what it feels like, how I feel mentally with it, right? Emotionally, because investing is, whether you like it or not, it is an emotional thing. You have to feel comfortable and be able to sleep at night. You have to be able to sleep at night. Yeah, you have to be able to sleep at night with what you're investing in. You have to be comfortable with it. You have to be chill about it, right? You can't invest in stuff that you're panicking, you're concerned. You want to be able to be comfortable. And I don't like seeing red, with my capital gains. With Misty, man, you'd be in the red on the capital gain, heavy. I've had JEPI for 3 to 4 years. I'm in the red right now, capital gains wise. Of course, total return has been strong. Let's say 30, 40% all time for me because I've had it for 4 years and it's appreciated. And the drip has been, rather the dividend has been 10% a year. So it's been healthy that way, but I'm still in a capital loss. I don't like that. I want to be in a capital gain while earning a dividend, earning an interest payout, dividend payout, whatever you want to call it, premium, income. So I go for NEOs because I like the philosophy. If you've watched interviews of them and you're seeing what they're about, I like what they stand for. I like their approach of both income plus appreciation. They are new guys to the block, but I like the philosophy. Read the prospectus, read their website. They won best ETF, some best ETF awards, I believe in 2024 for QQQI. That says something, that people have done their due diligence. Go on Seeking Alpha. Go read up on them. I'm into them. even more so than JetB. Even more so than JetB. JetB is good. They have a weaker tax structure. A lot of it's ordinary income, whereas Neos is doing some cool stuff by ways of return of capital coding for tax purposes. So I like that strategy they're doing. It's healthier for these, because you're gonna pay a hefty tax. You know, should you invest in these, there will be a hefty tax for these guys. What else can we say? Tax ain't good. We don't want no tax, but we have to pay the tax when it comes. But if we can optimize our taxes, that's the way to do it. We can optimize. We got cats here. So that's the story of today. That's the story, you know. Income, financial freedom, BTCI, QQQI. I've said it before and I'll say it again. It's a beautiful strategy. I think it's a healthy strategy. Are there flaws in it? Absolutely. Could you hedge against it and do some more protection, like have a treasury involved in this, or, you know, bonds and cash position? Sure. But I mean, it depends your age. If you are 25 to 35, you're stupid young. You are so young, and you can take risks while generating income, right? Like, I think capital gains are great, like I said, but you know, you can take these risks at a younger age. And even if you're older, now it's a different strategy. Guess what? Now, you know, QQQI or BTCI becomes a beautiful income solution for you, one that's fairly stable these days, and you can live your life on that, right? You know, compare this to like real estate, man. You know, real estate, to me, like the costs and the risks associated with that, and the, you know, even on paper when it says there's a cap rate and you're gonna see an income, like the risks associated with, and the volatility with the tenants and the potential things that break and interest rates, all these expenses are pulling against you, and the only thing benefiting you is pretty much your rent price, right? Whereas this, hands-free, click one button, you're in the ETF, it's paying you monthly. You know, you're letting the big boys do the work, and the underlying assets, yes, it's a covered call solution, but the underlying assets are the best assets in the world, the best companies in the world. So you're still investing in the Mark Zuckerbergs of the world. You're still investing in the Elon Musks of the world, right? That's what we want to do. We want to be connected. We want to be associated and buying into the smartest minds in the world, and the most attractive currency or asset, rather, whatever you want to call it, digital gold, right? Which has been appreciating considerably. So with that, if you're bought into the Bitcoin philosophy, and you know, you see that as a hedge against the dollar, and you've seen its appreciation, and we're capitalists, so we want it to gain, we want it to make money, absolutely, right? And so those things in mind, right? I think you're gonna be better suited with these type of ETFs, and you could even just go VU and QQQ versus real estate. Getting off topic here, but that's my story for today, guys. We've done a nice little walk, we've done a nice little talk, we talked financial freedom, talked about expenses. What do you guys think, man? What are you investing in? If you want to take a walk in Miami with me, I'm open to taking walks, and we can do financial walks along the way. Anyways, guys, all the best, and cheers.